We need to be really good and happy watching paint dry. Can you be excited about watching paint dry for 20 years? Because that's a beautiful skill to have. But the way to do this is, a couple of weeks back, I was at the Bridge National Championships in Memphis, where all these nutcase bridge players are going all in for points. It's not even dollars, for points. I don't know why they get excited about points, but they're all super excited about points. We can find other ways to use the brain power. So, Munger says that it's a really good thing that Buffett played bridge, because if he had put that time into Berkshire, it would have had a negative impact. So one of the issues with investing is everyone in this room except me has too much brain power. Okay. Like Warren says, you can give away 50 IQ points and your results are not going to change. They might even get better. It's a very important skill to build, to be able to, the Pascal quote, all man's miseries stem from his inability to sit alone in a room and do nothing. And actually, Pascal misspoke. What he actually meant was all investor miseries stem from their inability to sit quietly in a room and do nothing. So you have to be able to go through several decades of no activity. Can you do that, Alex? It's the most important thing to learn. The most important thing. And there's a hack, a very easy hack. Just find something else you're excited about, which doesn't involve dollars or money or investing or anything. You can become a bridge player. You can become a golf player. You can go race F1 cars, whatever. Find something else. Activity number 2, which is going to suck up all the time, so that you will live an excited life with the portfolio not being touched. So Nick Sleep, actually, I think he's in nirvana. That's where we have to get you to, Alex. We have to get you to nirvana before you enter the real world. Okay.
What are the top 5 attributes of a successful investor that you think are?
Okay. Well, we'll see if we can get to 5. But, I would say good traits or important traits for being a good investor. Number 1, the single most important skill is patience. So I think the thing is that markets have kind of a way of deceiving us, because, when you turn on CNBC and you see all those flashing red and green lights and all that, it's inducing the brain to think that you need to act now. And you need to act immediately, where nothing could be further from the truth. Buffett always talks about having this punch card, where in a lifetime you make 20 punches, and each time you buy a stock, you punch it once. So in a lifetime, you'd make 20 investment decisions, which means that if you started investing at 20 and ended at 80, every 3 years on average, you'd make 1 investment. And that is very hard for most people to do. And so the more you can slow down your investing, and the more patient you can be. So the issue is that the time scales over which companies go through change and such is very different from the time scales at which stock markets operate. And so you really have to not focus so much on the stock market and have a lot more focus on the nature of change in businesses, and be willing to be in there for a while. And like I told you, for the compounding to work, you don't need to double your money every 3 months. Even if you double your money every 3 years or even every 5 years, that's plenty, because it's just a matter of how many doubles you can get and such. So patience is the number 1 skill set. The second, I think, important skill would be that if you have run a business before, it's a huge advantage, because of the whole interplay between investing and running a business, because it's very important to be able to understand how a CEO thinks and the factors that they are primarily focused on thinking about when they're running the business. And that's hard to get to with spreadsheets and so on. And I think another very important trait for successful investing is to stay within your circle of competence. So I think Buffett always says that it's not the size of the circle that matters, but knowing its boundaries. It's absolutely critical. And, Charlie Munger talks about that. He gives a couple of examples. One is he says that if in a small town you bought the McDonald's franchise, you bought the Ford dealership. Ford dealership, gas station not so good. And gas station we leave to the Patels, low-cost operations. Okay, and then you want the best Class A office building, and you want the best residential building, right? So if you've got these 4 assets, and you don't need to own them completely, you could own 20% of each of them, right? So his perspective was that if in Peoria, Illinois, you own these 4 assets, and you just sat on them for your whole life, you would end up probably quite wealthy. And so if you think about it from a modern portfolio theory point of view, you would say, well, you're not diversified, everything's in one geography, et cetera, et cetera. Yeah, but the odds I'd probably still work out. And in fact, he has a friend here in near Stanford, John Arriaga, who all he did was bought real estate within a mile of the Stanford campus. And I think Arriaga is a billionaire. And so what is Arriaga's circle of competence? It's this small. So the size of the circle is not relevant. Staying inside the circle is very fundamental. So I think circle of competence is a very important trait. Another important trait is margin of safety. So you buy things for well less than what they're worth. And then I think the final piece would be that what Ben Graham says, that you're not buying a piece of paper, you're buying a fraction of a business. So if I were to think about investing in Google, for example, the question I should ask myself is, if my family had $1 trillion, would I be happy putting 410 billion? Is that what the market cap is right now? 410 billion, right? So if I had $1 trillion, would I be comfortable putting 410 billion into Google? And if the answer is no, then I shouldn't put $10 into Google, right? So the mindset, so many times when people say, what do you think of Apple? And they don't know the market cap of Apple. So my question is, why are you talking to me about Apple? You don't even know what the company is for sale for, So if you're going to invest, at a minimum, you got to know what the entire business is selling for, and would you be willing to put 50-60% of your total family assets, if you had that much, into that business? And if the answer is no, then don't go there, And I would have been willing to do that at Stewart Enterprises, at the pricing I was looking at and all that. In fact, what I would have done, I would have bought a whole bunch of the debt as well too, just to get total control over the situation. So, and then just sit on those cemeteries. That'd be fine.